Welcome back. In our top business story, the Dubai Mercantile Exchange announced today that it has achieved a new monthly trading record in August. Trading of its benchmark Oman crude oil futures contract, in short called DME Oman, for the month totaled 95,440 contracts. That is approximately over 95 million barrels of Omani crude, the highest since trading began on the exchange in June 2007, and 7.8% more than the previous record set a month earlier. DME Oman is the largest physically delivered crude oil contract in the world. Thomas Lever, chief executive of the DME, said these growing volumes underscore the real value the Oman contracts bring to the market and its participants. The Abu Dhabi Department of Economic Development signed a cooperation agreement with the Pudong Financial Services Office of the government of Shanghai Pudong District. The agreement is meant to promote the strategic cooperation between the two, economically, socially and financially. Nasser Al-Suwaidi, the chairman of the DED, said how important it was for the UAE and the Emirate of Abu Dhabi in particular to develop and strengthen the economic and investment ties with China, as the UAE is China's second largest trading partner in the Gulf region. Non-oil trade between Abu Dhabi and China during the first half of this year reached 2.2 billion dirhams, up 64% from a year earlier, figures released by the DED showed. Courier company Aramex, the Gulf region's largest, is considering investing in companies in Turkey to link its operations in the Arab world with the Eastern Mediterranean country. Trying to gain access to emerging market country Turkey is seen as the latest sign of the DFM-listed company's strategy to widen its footprint outside its Middle East home market. Aramex believes Turkey to be a natural expansion market for the company, CEO Fadi Gandour said. To be able to set foot there, Aramex aims at possible acquisitions or partnerships, he added. And now let's look at the stock indices across the GCC. And in our world business news, a disorderly Greek default is looking more and more likely. Meanwhile, the Greek government announced on Sunday to impose a 2-year property tax to raise 2 billion euros to help the country meet its deficit targets of 17 billion euros this year. German Economy Minister Philipp Rösler said in an interview there should be no more taboos, including, if necessary, an orderly bankruptcy of Greece. The EU, IMF and the ECB, the so-called Troika, is pressing Greece to meet its fiscal targets. Otherwise, they would stop making bailout payments. Delegates interrupted a visit on September 2nd after a row over the size of the budget shortfall and its cause. The Greek government now warned it won't be able to pay salaries and pensions if the next tranche of bailout money, 8 billion euros, is not paid out soon. The Troika will return to Athens this week to check on its austerity progress. The euro is under pressure again today, also because investors are worried about the ECB chief economist Jürgen Stark's sudden resignation last week. He is a strong opponent of the ECB's bond buying program to support debt-laden countries, which he claimed had blurred the boundary between fiscal and monetary policy and undermined the ECB's independence. With him leaving, this could be the end of strict German monetary principles influencing the ECB policy. We earlier asked Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC, how all this plays into the euro versus the dollar trading.
Jürgen Stark's surprise resignation from last week couldn't have come at a worse time, Linda, as the ECB is trying to navigate through the single worst crisis in the 12-year history of the single currency. Obviously, Jürgen Stark's resignation follows 7 months after another ECB member from Germany, Axel Weber, also announced his surprise resignation. And what this really shows is a division and a rift in policy amongst policymakers in the ECB. As you rightly mentioned, Jürgen Stark was a staunch opponent against the ECB's bond buying program, and his surprise exit will definitely throw doubts into the solidarity and the decision making of the ECB. And the timing really couldn't have been worse, especially with the Greece debt situations, taking a toll for the worst last week. What we saw last week is the Germans are openly discussing on on solutions to possibly containing Greece's risk to itself. We did see a situation whereby some policymakers were doubting if the second tranche of bailout money of 8 billion euros would be passed on to Greece. We did see some moves by the Prime Minister Papandreou on the weekend, which did pull down the Greeks' budget problems. We saw it reduce them a little bit, but overall the fundamentals don't look good, and Starks's surprise resignation will have a weaker effect on the euro. We're looking probably at some more downsides. We saw the euro trading lower against the USD today. It opened at a lower gap. We're expecting probably a move towards about 133 to 134 this week.
Only days ahead of the Frankfurt Motor Show, Germany's largest car maker Volkswagen accuses its Japanese ally Suzuki of a partnership breach. According to press reports, Suzuki now wants to end the alliance with VW. Volkswagen says a separate deal by Suzuki to use Fiat engines is a breach of their partnership. Suzuki, however, denies violating the agreement. Also, Suzuki disputes any form of VW influence. However, the Germans hold 20% in Suzuki, where VW can influence financial and operating policy decisions. VW said it wants to continue with the alliance. Suzuki, however, will seek to end the pact with Volkswagen, even if the German automaker wants to maintain it, Chairman Osamu Suzuki said today in Tokyo. Before we go, here's a quick overview of the oil, precious metals and currency markets. After that, we have the day's sports news for you.